So let's take a look at the statistics for the LC1 entry model, and we'll also go through the statistics for LC2A with those two combined, right? So as if you were trading them both within your trade plan. So how we're gonna go through the data in this is we'll just quickly recap the sort of basic, high level trade plan rules that I used. We'll then look at just the stats for LC1 on its own. So by raw data, we're just going to look at kind of, including those low probable trades as well. Then we're going to look at the LC1 data by removing those low probability trades to kind of try and show what, that great potential if you can try and reduce as many low probability trades as possible. And then we'll look at the summary stats, typo there, but the summary stats of both of those entry models combined to give you an indication of sort of what to expect if you just traded those two entry models in your trade plan alone. And then at the end, we're going to discuss around how you could potentially try and improve those results yourself with some tweaks to the trade plan rules. So same as LC2A, you guys should know 4 hour as your higher time frame. I use the M15 as my medium time frame, so that's the main time frame. The M15 is where I'm using my directional bias, and I'm trading from those M15 POIs. Okay, so you must wait for an M15 POI mitigation, and then I look for the entry model on the M5 playing that M15 POI. Okay, obviously the LC1 entry model, you guys should now be very familiar with that, using that lower time frame led to the left in very specific scenarios. Fixed R target, similarly to LC2A, as I did the back test, I just used a spreadsheet to allow it to show me what the most optimal target is, giving us that that fixed R target of 3.3R. So in reality, in the live market, that's a crude way of trying to give us a net 3R when we actually take into commissions that will get charged on a live account. This time I only tested between 7 a.m. UK time and 4 p.m. So I did an hour less because I just realized there's no point there wasn't really that many trades, and the strike rate was a lot lower after 4 p.m. UK time. And another big caveat to this is that the data includes just basically trading through high impact news. Okay, so this is definitely something you'll have to bear in mind with your actual live trading, of course, that you'll close trades early, or you might not even take them if it's in or around that high impact news. And this data is solely on EURUSD from the start of 2023 to year to date, which basically means I've now included from January 1st to the end of November. Okay, so just December is missing from this data. Big disclaimer, gone through this before, but it's super important that you really take heed of this and take note of this before we look at the stats. And that is backtest results are obviously not live results. Okay, we have to deal with real stuff of the market, spread, slippage, commission, swaps. They are all going to generally have a negative impact on your real results. Psychological errors are a massive one. Okay, there's absolutely, my personal live trading is never going to be like my backtest results, right? I'm going to talk myself out of trades. I'm going to talk myself into low probability trades. I'm going to make errors. It happens. Real life gets in the way. I'm going to go and take time off from the markets. I'm going to go on holidays. I'm not going to trade when I'm away. There's going to be a ton of time I'm going to miss from live execution. I've got real life commitments that get in the way. So again, you're not going to hit every trade, and that's okay. You don't need to. Hindsight bias as well, it's something that can't be ignored. I'm very familiar with EURUSD price action. This is the data that I've backtested with this. That is going to be baked into it for sure. But of course, you've seen that we have tried to make the strategy as systematic as possible. So I still have a lot of faith and trust in the robustness of this backtesting data. Okay, but live data, how you actually execute the strategy, is ultimately what matters. But as we'll go through this data, and as I spoke about before throughout the LC2A module, the lessons in there, that I've tested it by taking what I deem to be low probability trades. There's a very high trade frequency here, so I know that carrying this over into live market, especially with the forward testing we've done, it will be fine. I will still be more than profitable. It's just that I'm not necessarily expecting to hit what is showing in the backtesting data. Okay, so you want to have a healthy sense of realism. Still being optimistic, okay, you don't want to be super pessimistic, but you need to have some realism in that backtesting results are not live results. Okay, I know it sounds obvious, but I don't know, there's a lot of naivety that can go around in the trading space, and you have to be very cognizant of that fact. And again, going to keep saying it until you guys are absolutely sick of hearing me saying it, but you must focus on the medium time frame narrative and the medium time frame POI selection. Okay, it's not the entry model, it's the medium time frame narrative and the medium time frame POI selection. That is the most important thing about this strategy, even more so with this entry model, particularly the LC1. Okay, the LC1, it's going to take you some time to master this. It's a much harder strategy to know when and when not to execute it. Okay, let's dive into the data. So like I said, first we're going to go through all of the LC1 trade data on its own, where I've basically taken a lot of low probable trades in there as well. So, you know, from January to the end of November 2023 on EURUSD, using the LC1 on the M5, that is suggesting a net return of 70R. Obviously, you need to take in commissions. So we've been targeting 3.3 to try and do a crude way of that. So if we say that, you know, that extra 0.3 is basically going to be removed on all of our winning trades to account for commissions, then that very roughly gives us 58R. Okay. Now these stats here, they haven't removed that 0.3 because it was just going to make the formulas too complicated. It was a bit too long. So you kind of have to reduce these stats in your head a little bit. Okay. And now we can see, so strike rate is really not amazing if you're including those low probability trades. Now, if you have not skipped ahead of the lessons and you have watched, you know, all of those lessons where I'm saying when we should and shouldn't be hitting it, you can remove mainly when the strategy is not worth using, which is A2, right? Trying to keep buying or selling after the medium time frame swing break of structure, trying to trade phase D, okay, when you just counter everything, trying to trade in ranges. Okay, if you remove that, as we'll see in a minute, it's really going to help this. But this is just to kind of show that even if you take low probability trades, you might be okay, but I don't really want to encourage that whatsoever, because the reality is you're going to be in bigger drawdowns. You know, who's to say you're going to keep being aggressive when you need to be to then actually take advantage of the winning trades? You know, being aggressive sounds great on paper when you look back at the stats here, but in reality, it's very rare that you're going to do well if you keep taking low probability trades. So, you know, if we remove those low probable trades, there we go, reset that. The strike rate is much more what you should be aiming for, in my opinion, getting that strike rate above 50%, you know, as much as possible. So the big difference between here and the previous one is actually the total R is not too much the difference, but here we have 65 losses and we can reduce that down to around 24. Okay, so the big thing about this, like I've been trying to say, is with LC1, it's like a little bonus model, entry model. You only want to be using it in very specific scenarios. LC2A, waiting for the fake break and the pullback, is what you want to be thinking for 80-90% of the time. Now, the big difference between here and including the low probability trades is we have taken away a lot of low probable trades from A2. Okay, so over here, you can see, we go back to here. So this is with the low probability trades. There was a lot of A2 trades here. Now, the reason why this, I mean, it's basically break even. But the reason why this ends up being probably break even rather than just completely in the red is I think there was one good period in July, I think it was July, where like EURUSD just literally flew to the moon. It just was so bullish, and aggressively trading A2 with really poorly priced trades, it worked quite well for about 3, 4, 5 trades in a row. But if you do that in most occasions, you're going to get burned. And who's to say you're not on holiday during July? Who's to say those trades, you know, those trades could have been during New York and you only trade London, and then you don't take advantage of when, you know, the one time that aggressive entry model played out, you're going to be in drawdown. So that's why for me, I'm happy to just really leave that alone, apart from very rare circumstances where, you know, maybe I'll have the confidence to take it. But generally, that's why I'm pushing you towards just A, B, and really C. Okay, so staying away from A2, D, and range, they're going to be really what I would advise. Okay, so A and C for the most part, and then we want to trade B when it's coming into the extreme POI, right, in which we're expecting the internal to reverse in our favor, right? We're expecting the swing pullback to end, and even ideally you can wait for like a medium time frame chock before you even want to take B, right? So that's basically the difference. So we've removed a load from A2, D, and range, and that's kind of really where you're upping that strike rate a lot higher towards 56. Now, do I expect to kind of hit this sort of return with LC1 in the live market? No, I'm going to be aiming towards that. But again, remember, as things stand, I only trade the London session. This includes both London and New York. I'm going to be on holiday. I'm going to be away. I'm going to be sick. I'm going to talk myself out of trades. I'm going to talk myself into low probability trades. Okay. But this is just to give you a good kind of indication. If you kind of look between both, maybe we can try and aim somewhere in the middle. One other thing as well, my own personal trading, I'm much more likely to be conservative in the live market. That's just the way I am. I'm probably not going to take this many trades. But it's just to show you what the potential is here. So I guess the point I'm trying to make here is, look, I've clearly proven that the strategy is robust, particularly including those low probable trades, but these are just my stats. We've made the strategy as systematic as possible, but there is that room for sort of, let's say, 10 to 20% of discretion. It takes a lot of time to build the experience to know with how to build a narrative, how to do POI selection. Okay, it is a much more advanced strategy than potentially other strategies out there. So take my results as kind of just a rough roadmap of what is potential out there, but like really it's your stats that matter. Okay, they are really what it comes down to, of what you can do and how you apply these rule sets to the market. So I don't feel like I'm explaining myself very well here, but like, don't just see these stats and go, right, now I'm going to execute that next year or whenever you're trading in the market, and it's just going to be just like this, because it's not the case. Market's going to vary. It's going to vary year to year. Like, some of these months are barely break even whilst trading both sessions with just this entry model. Okay, some months are really, really good and really, really strong. You need to get out of that kind of employee mindset of thinking it's going to be consistent returns every month. It's going to vary a lot. Okay, so I think you guys get the drill. You can obviously pause the video and dive into these stats as much as you want. But really, I've tried to make it clear in the previous lessons of how and when you should be ting about executing this model, and then go and apply that to your own trading. Now, if we combine the two entry models, LC2A and LC1, just reset this a bit, it brings us to this. Now, again, caveat, these stats you're looking at now, where it says this is including low probable setups as well for the two entry models and across New York and London. Okay, so this is if you're trading New York and London, both of the entry models, and just taking a lot of low probable trades as well. It doesn't include every single it doesn't include every single low probability trade there ever was, or I haven't taken the ridiculously low probable ones. There was just ones in there that I could see, even sometimes I would be tempted to hit because they kind of look okay in the moment, right? So this kind of gives you a rough indication of how you can trade there. I'm not personally expecting to hit 30R every month, right? It's a nice thing to aim for, but it just shows you the potential is there, right? So even if you don't hit that and you hit even a third of that, you're going to do okay. Some months might end up being negative, like June, whatever. But this gives me a lot of confidence. I know how robust this is, even with hitting some less ideal trades within there. Okay, again, you can dive into this in your own time. The breakdown is here. I'll just show you there as well. Monday wasn't that great, but yeah, there's not really anything massively interesting that I've really had the time to super dig into here. Again, it's the high level stats that I really care about, and then I'll dig more into the real niche stats more when I've got more and more live data, really, because that's what's important, what is important to me. And I'll show you here. Obviously, this would be super ideal if we can remove those low probable trades as much as possible. Then you can really get that strike rate above 50%, which is definitely what I'll be trying to optimize for. And yeah, don't get bogged down if you have a negative month here or there. It's totally normal. You've just got to focus on the bigger picture, get to that year end. And yeah, there we go. So as always, when you do your own data, just collect the trades during the hours that you can execute and you can be on the charts. And with the way that you like to trade, some of you are going to be more aggressive than others, etc. Some of you might have slightly different rules with LC2A. You might use different management targets, all of that good stuff, right? So yeah, you can dive into that there, and then I'll kind of let you take a pause of this if it's useful. Okay. But yeah, this is kind of what I'd be looking to try and hit during London. June, probably terrible. Probably in reality, I'd miss a few trades. I'd probably have a negative month. It's totally fine. You still end up on a great year. The other thing as well is I haven't done the work yet, but I am looking to test this on pound dollar. So my idea at the moment is that I may be trading these two entry models, so LC1 and LC2A, alongside pound dollar. But I need to do my pound dollar testing, and we'll see how we go with that. Okay, so yeah. These two entry models combined obviously give you the trade frequency that so many of us, obviously prefer. It's much easier on your psychology to have that high trade frequency. But with that comes the responsibility to make sure that you are just not taking multiple trades a day. Because if you're doing that, you are most likely over trading. You're most likely going to get yourself in a lot of sticky situations if you don't have the experience to know when and when not to hit it. Okay. But yeah, this is good. take this away, do your own testing, do the work. Don't just jump into live market and start hitting this because, you know, Matt's done the testing, you know, it looks good for Matt. Like, I'm extremely experienced. There's no hiding away from it. I've been in the market for, I think, over eight years now, right? I've done insane amounts of work. I'm staring at the charts. You know, I'm at my desk for 10 hours a day. I do this full time. This is a full-time gig. So for those of you who've been here a year or two, a couple of months, whatever, you know, it takes time to get to a level in which you really, really know what you're doing, okay? But yeah, let's talk about how we can potentially even, you know, improve these results even further. So if you paid attention and you watched the statistics video from the LC2A module before this, you will see that these are all the same points apart from the last two, okay? But they're still extremely relevant. If you want to improve your results, particularly in the live market, the most important thing you can do is improve your skill on building that medium time frame narrative and getting that POI selection correct, okay? The entry model is whatever. It's the POI selection and the narrative building is what is most key, okay? Then for those of you who get a bit more experienced and advanced is what I tried to say there, but together, you do not need to necessarily limit yourself to fixed R targets in every single scenario. There are going to be times throughout the year where things are going to line up and you're just going to have a high confidence that there's good potential here for a bigger target. It's up to you whether you want to allow yourself some leeway in your trade plan to bend your rules to use technical targets. I would exercise this with caution. If you are not consistent, do not do this, okay? You need to earn the right to know when to target past your typical fixed R target. And even if you have earned the right, do you need to do it over the course of a year? No. Using fixed R targets can be a lot more easier on psychology for the majority of you, okay? Other thing you might want to play around with is how you can remove your risk. Some of you may want to trail to break even. Some of you may want to take partials, but again, it complicates things. I would keep it very, very simple and just stick with set and forget fixed R. As for the majority of you until you get consistency, but this is an option if you want to consider it. Of course, trading multiple pairs, that's going to increase the profit potential. It's going to, again, potential with an asterisk there, potential. It's going to increase the trade frequency. But again, it increases the amount of risk that you can potentially be taking in the market because there's going to be even more opportunity. There's going to be more work, more analysis, more markups, more journaling. So, you know, you're going to have to make that decision for yourself. And obviously trading, you know, multiple EMs, if you want to trade both LC1 and LC2A, if you want to trade the previous LQEMs, some of you may want to trade risk entries, some of you may have other entry models, okay? But I would say less is more, quantity over quality. We want to have the ability to have high trade frequency, so, you know, we can capitalize on market moves, but the key is knowing what moves you want to be in, not just hitting every entry model that sets up. I know I'm repeating myself, but I have to do it because there's so many of you, you know, until you get that experience, until you've been burnt, you won't really take heed of this advice, okay? Now, these are specific, these two ones at the end for this LC1 entry model. I spoke about it briefly in the very first lesson of the module, I believe, but obviously I'm using lower time frame lid. I think a really good filter, especially at the start, that could help you reduce the number of potential trading opportunities is to only use medium time frame lid, okay? I think that could be a really good filter for when you're starting out. I haven't actually collected the data. I wish I had now to kind of filter to go in and see what the difference in stats would be. But yeah, I think that's a really, really solid one that you can consider using as a rule. And another rule you may want to add in addition, or maybe you just want to use one or the other, whatever, is that the lid must be within the medium time frame POI. Okay, so that kind of is another way of solving the problem of asking yourself, is the lid too far away? Is it too low down a leg? Is it relevant? This could be a rule that may help you to be a little bit more mechanical and in theory improve the strike rate because you're using that lid right within the medium time frame POI. Okay, so that's definitely something to consider that I would push you guys towards if you're struggling with this entry model and if you're finding it, you know, a little bit too hard to know when and when not to hit it. Okay, so yeah, I'm excited for you guys now. You've got both of these really, really powerful and effective entry models in your hand, but proceed with caution. Make sure that you're just not hitting every trade, as I keep saying. Build the experience, but I'm very, very high confidence that if you put in the work, 3 months, 6 months, 12 months, however long it takes, you can be in an extremely good position to have good results in the long run. So yeah, hope you guys took some value from that. Hope you've taken some inspiration for the work that is required. Enjoy it, enjoy the process. And yeah, don't be afraid to share your testing results in the Discord channel to inspire others. Cheers, guys.